I believe that there are so many conflicting forces in society, in the economy, that at the very least we can expect volatility. I note too that in my 45 or 50-year investing career, I've been through 5 periods where, irrespective of the cause, broad equity markets have fallen between 40 and 50%. If you have a liquidity-driven uh, market trauma, like the brief one we had in March 2020, or the broader one we had in 2008, when you have a liquidity squeeze, there's nothing that gets you through it like liquidity. If you have cash, you have the tools, and you may or may not have the courage to employ that cash when asset prices sell off by 50 or 60%. I still personally remember the crash of 2008 with some fondness because I came into that crash with a lot of liquidity. The consequence of having both the cash and having experienced it before gave me the courage to take advantage of that liquidity squeeze rather than being taken advantage of by that liquidity squeeze. Your more sophisticated listeners, I would encourage to view the cost of negative interest rates on their savings as an option premium. If you have the cash, you have the option to take advantage of liquidity squeezes that I think are much more likely than not to occur. On a personal note, I guess, at age 68, running up hard on 69, cash is a soporific. It helps me sleep nights and stay calm. I've had periods of time in my life, Patrick, when I had a lot of cash, and I've had periods of time in my life when I didn't have much cash. And I preferred those periods when I had more cash. And this is one of those. We are in the early stages of a natural resource bull market. That's inevitable. It could be postponed by a global recession or global depression, something that cut into demand. But the fact is that supplies are going to become increasingly constrained. In a normalized environment, that means that prices are going to go up. And in precious metals, while the precious metals may suffer, I'm not saying they will, but while they may suffer next year, from an increase in nominal interest rates, an increase in precious metals prices is, from my point of view, almost inevitable. Precious metals prices rise when people are concerned about the maintenance of purchasing power in their fiat and conventional savings products. Let's look at that. Quantitative easing. 40% of the US dollars in existence have come into existence in the last 2 years. Is that because the US economy has grown 40% in size? Of course not. Quantitative easing is counterfeiting. That's what it is. And counterfeiting should make you concerned about the currency. Debt and deficits. Precious metals investors need to think about debt and deficits. In the US, the on and off balance sheet liabilities net present value of the US government exceeds $150 trillion. And we pay this debt with a budget that's in deficit $4 trillion a year. I'll leave that one alone. But the most pernicious, or from the point of view of precious metals investors, the most promising, oddly, is negative real interest rates. The idea that savers should pay spenders to consume now while savers defer enjoyment and take credit risk is truly insane. And the consequence of that, I think, is higher precious metals prices. Another piece of arithmetic is that the market share of precious metals and precious metals related investments, despite their attributes, is at an all-time low, which is to say fear is at an all-time low. It is estimated that the market share of precious metals and precious metals related securities in the United States is 0.5% of the value of total savings and investment assets in the country. The 3-decade mean exceeds 1.5%. If quantitative easing, debt and deficits, and negative real interest rates increase the appreciation for precious metals, all they have to do is revert to mean. And if they revert to mean, demand for this asset class will triple. I actually think it will overcorrect. In other words, I think it'll overshoot mean because that's the way mean reversion works. And if you think about the impact that that would have on the prices of precious metals and precious metals related securities, you get some sense of what I expect will happen, perhaps not in 2022, but certainly will happen over the next 5 years. If you look at a history of precious metals bull markets, Patrick, the 2000 to 2011 bull market, the 1970 to 1971 bull market, what you see is that they're not 2 or 3 year long affairs, they're 10-year long affairs. We're perhaps 3.5 years into it. And the dimension is unbelievable. The 2000 bull market, the gold price went from what, $253 an ounce to 1900? The silver price went from $5 to 50. I'm not saying that past is prologue. I'm not saying that the precious metals prices will necessarily increase sixfold. But I think they'll increase by more, at least in nominal terms, than other people believe they will. Because I think the arithmetic supports it, even though the narrative is hostile to it. I've always been attracted to the science fiction concept of the organization of humankind into philes, P-H-Y-L-E-S, which is to say that we often have more in common with each other across national boundaries than we do within national boundaries. And the disintermediation of information gives us the ability to build connections with people irrespective of race, color, religion, nationality, all these false barriers, and begin to build connections across value and philosophy, which I think are much more important. And I think that that's a hugely, hugely, hugely misunderstood positive. The tools that people have to affect their own empowerment and their own education, which they can attract from each other rather than have delivered to them by the World Economic Forum or some other band of frauds, I think is spectacular. The bad news is that people still seem to prefer to think that the big thinkers have their back. Rather than take advantage of distributed media, rather than take advantage of the opportunities for individual initiative, many people in the world still want to believe that the Fed has their back. They still want to believe that Trump was better than Obama, or that Biden is better than Trump, or that any of them are anything other than a collective to steal their savings and deprive them of their freedom. It is this slavish faith in the collective, this slavish faith in government, this slavish faith in a system of increasing central control that's proven to be, so successful in Soviet Russia and Maoist China and Castro's Cuba and Zimbabwe. I mean, this thesis has been proven false every time it's been tried for my whole life.